Welcome to Beacon of Books, where we turn the world's best books once into concise and powerful insights you can learn in just minutes.
In a world where markets rise and fall without warning, in an age overflowing with fast money, promises, and speculative excitement, one book remains a timeless guide for rational, disciplined investing. The Intelligent Investor is not a manual for quick riches. It is not a strategy for gambling in the stock market. It is a philosophy, a framework for thinking clearly when others are emotional. This book teaches us something more important than how to pick stocks. It teaches us how to think, in a world where markets rise and fall without warning, in an age overflowing with fast money, promises, and speculative excitement. One book remains a timeless guide for rational, disciplined investing. The Intelligent Investor is not a manual for quick riches. It is not a strategy for gambling in the stock market. It is a philosophy, a framework for thinking clearly when others are emotional. This book teaches us something more important than how to pick stocks. It teaches us how to think. Investing versus speculation. Benjamin Graham begins with a powerful distinction. The difference between investing and speculation. An investment operation, he explains, is one that, upon thorough analysis, promises safety of principal and an adequate return. Anything that does not meet these standards is speculation. That definition alone changes everything. If you are buying a stock because someone recommended it, because the price is rising, or because you fear missing out, you are not investing, you are speculating. And speculation, while tempting, often rewards emotion in the short term, but punishes it in the long term. The defensive and the enterprising investor. Graham identifies two types of investors. First, the defensive investor. This person seeks simplicity and safety. They are not interested in constant research or market timing. They want steady growth, minimal stress, and reduced risk. For them, Graham recommends diversification, a balanced allocation between stocks and bonds, focusing on stable, established companies. Second, the enterprising investor. This investor is willing to dedicate time, energy, and discipline to analyze financial statements and search for undervalued opportunities. But Graham emphasizes something crucial. It is not about which type you are. It is about knowing yourself. Your temperament matters more than your intelligence. Mr. Market. One of the most famous concepts in the book is the allegory of Mr. Market. Imagine you own a business with a partner. Every day, this partner offers to buy your share or sell you his share at a price he sets. Some days he is wildly optimistic and offers a very high price. Other days he is depressed and fearful and offers a very low price. This partner is the market. Mr. Market exists to serve you, not to guide you. You are free to ignore him. The intelligent investor does not follow the market's mood swings. Instead, they take advantage of them. When prices fall far below intrinsic value, they buy. When prices rise far above value, they consider selling or holding patiently. The market's volatility is not a threat, it is an opportunity. The margin of safety, perhaps the most important principle in the entire book, is the concept of the margin of safety. This means buying securities at a price significantly below their intrinsic value. Why? Because no analysis is perfect. No forecast is certain. The margin of safety protects you from errors in judgment and unexpected downturns. Imagine driving a truck that weighs 5 tons across a bridge built to hold 10. That extra capacity is your protection. That is the margin of safety. It is the difference between calculated investing and reckless risk-taking. The importance of financial analysis. Graham insists on studying a company's fundamentals, consistent earnings over many years, reasonable debt levels, stable revenue growth, a history of dividend payments. He warns against chasing popular trends or exciting new stories. A strong company is not necessarily the one making headlines. It is the one quietly producing steady results. Excitement may attract attention, but discipline builds wealth. Emotional discipline, according to Graham, the investor's worst enemy is likely to be themselves. Fear causes selling at the bottom. Greed causes buying at the top. The intelligent investor develops emotional control. They understand that market declines are inevitable. They accept volatility as part of the process. They remain calm when others panic. In times of crisis, they look for value. In times of euphoria, they look for risk. They do not follow the crowd. They think independently. Diversification. Another cornerstone of Graham's philosophy is diversification. No single stock, no matter how promising, should represent your entire portfolio. Diversification does not guarantee profits, but it significantly reduces risk, especially for the defensive investor. Spreading investments across different companies and asset classes creates stability. It protects against unexpected failure. Long-term perspective, Graham consistently reinforces the importance of time. Wealth is not built overnight. It grows through patience, consistency, and compounding. The stock market is not a lottery. It is a mechanism for transferring wealth from the impatient to the patient. The intelligent investor understands that true returns come from long-term ownership of strong businesses. Price versus value. One of the simplest yet most profound lessons in the book is this: price is what you pay. Value is what you get. A stock can be expensive at a low price if the company is weak, and it can be a bargain at a high price if the business is strong and undervalued. Your job as an investor is to recognize the difference. Practical takeaways. Graham's philosophy can be summarized in several key principles. Base your decisions on careful analysis. Always maintain a margin of safety. Control your emotions. Think long-term. Do not attempt to constantly predict market movements. Focus on value, not popularity. The Intelligent Investor is more than a book about stocks. It is a guide to rational decision-making, a lesson in patience, a reminder that discipline outweighs excitement. In a world driven by headlines and noise, Benjamin Graham offers clarity. He teaches us that we cannot control the market, but we can control ourselves. And in that control lies the true secret of intelligent investing. The Intelligent Investor is more than a book about stocks. It is a guide to rational decision-making, a lesson in patience, a reminder that discipline outweighs excitement. In a world driven by headlines and noise, Benjamin Graham offers clarity. He teaches us that we cannot control the market, but we can control ourselves. And in that control lies the true secret of intelligent investing.
This was a summary of today's book from the Beacon of Books channel. If you liked the video, don't forget to like the video and subscribe to the channel to receive all the new content.